price and assess its future outlook. According to Reuters, the US Department of Energy has begun to replenish crude oil stockpiles in the Strategic Petroleum Reserve, which rose by nearly 1,000 barrels since last week. The increase marks the first increase in reserves since January 2021, potentially reminding markets that the release of oil from the SPR has now come to an end as the US begins to attempt to refill its reserves. However, it would appear that replenishing has had little to no impact on the price of oil. Yet should the US ramp up its refilling of its SPR, then we may see the increases starting to support the price of oil in the long run. China's economic data that was released on Monday indicated that the Chinese economy outperformed analyst expectations by growing by 0.8% for Q2 of 2023. Yet compared to last quarter's growth of 2.2%, could be perceived as a worrying signal for the world's largest oil consumption giant. Furthermore, on a year-on-year level, China's GDP failed to reach market analyst expectations of a 7.3% increase in growth and instead came in lower at 6.3%. The continued economic releases stemming from China appear to be painting a dire picture for the economy, and as such may weaken the price of oil in the long run, should China's economy continue to underperform despite its post-COVID reopening. According to a report by Reuters, Iran has warned against any oil company deciding to unload Iranian oil that was confiscated by US authorities in April off the coast of the Marshall Islands. According to news outlets, the companies usually involved in the unloading of oil from tankers appear to be skeptical in getting dragged into an international conflict between the US and Iran, potentially fearing that Iran might target their oil ships operating in the Persian Gulf. As a retaliatory measure, therefore, given the increased tensions between Iran and the US, we may see a tit-for-tat measures where Iran may decide to seize oil tankers, thus escalating tensions in one of the world's most important oil arteries. In such an event, given the threat to the supply of oil, we may see oil prices edging higher due to the elevated risks. According to Bloomberg, a Russian oil tanker named Primorsky Prospect is sailing up the coast of Norway in order to use the Arctic route to reach Rizhao in China. By using the Arctic route, the oil tanker is estimated to be able to shave off 2 weeks, which is approximately 30% of time of the voyage that would have taken the southern route via the Suez Canal. Given China's increasing imports of Russian oil, we may see an increase in supply by Russia, as transportation costs are reduced, thus making it cheaper for Chinese buyers. On a macroeconomic level, if Russia continues to see increased demand from China, it may undermine its pledges and agreements with OPEC to reduce its oil production, thus potentially weighing on the price of oil in the long run.